Indian equities recover from early losses as traders digest a shock from the weak economic data. The sensex and the nifty end with gains of around 0.5% each.
Cement is the sector of the day. Stocks like Sagar Cement, JK Cement, Ultratech, Dalmia all rally between 4 to 7%. But veteran expert Anil Singhvi sounds cautious on the sector, believes the demand growth will be just 3 to 4% this year.
It's a mixed bag for auto sector in November. The SUV segment sees healthy growth. The two-wheeler exports shine, while the domestic sales remain under pressure. The low-end passenger cars, commercial vehicles and tractors see muted demand. Hello and welcome to a fresh new edition of Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and we set you up for tomorrow as well. I'm Nigel and with me is Surbhi. Hey Surbhi, a good outcome.
Absolutely. We were coming out of a heady weekend in terms of news flow and some not so great news, but I think the bulls managed to prevail today, Nigel.
Well, that's right. And, I think let's take stock then of what went on in today's trading session. India's GDP number, well, it hit a 7-quarter low, yet the markets rallied. Why was that? A few factors. The GDP, well, it's a lagging indicator because you're giving data of a couple of months ago. The second factor is the markets are betting big that the second half of the year, the government will spend, you'll have bank credit offtake as well, that will improve. So they're betting on a better second half of the year. And the weak GDP number, well, it puts all eyes or maybe puts some pressure on the RBI as well. What are they going to do next? Can they do something to stimulate the economy? That's something that the street is looking forward to. And the bulls, well, what are they factoring in now? They're expecting some kind of surprise in the December meet. Maybe a CRR cut, maybe, just maybe. And now they're saying that, in early 2025, we should get a repo rate cut. That's what the bulls believe, and nothing wrong in being optimistic, though hope is not a data point. But in today's trading session, the recovery was such that the GDP data was put aside and the markets chose to look ahead. Surbhi?
Oh, absolutely. I completely second that. I mean, the bulls really hoping that there's going to be some sort of relief coming in the form of stimulus. Now, whether it comes in from the government or the RBI, that's the big question. RBI is more of a talking point because of the fact that we're running into policy on Friday. And you saw that play out. I mean, on the equity screens, there was green. And even if you look at the bond, the benchmark yield cooled off a couple of basis points, but not too much because it's anyone's guess. Inflation is still running very, very hot. So will the RBI relent or not at some point in time? If not this week, then maybe in the coming policy. That seems to be the big consensus. Let's talk about sort of what took the market higher. Healthcare, pharma, IT stocks, it was fairly broad-based. A lot of auto names wherever the November sales numbers have been above expectations, and we'll tell you more about those names as we go forward. So autos saw some buying. There was a little bit of weakness in some consumer names like a Britannia and Levers. We'll get to the contours in just a bit. But the good news for the market was that there wasn't too much of slipping from this high. And the fact that mid-caps did really well today. In fact, the mid-cap index was a complete outlier. It was doing a lot better than the large cap indices, and the advanced decline ratio is very, very strong. Almost 2 stocks advancing for every one declining, so not a bad picture. The market choosing to be more optimistic. So let's straight away get down to today's lineup. We have plenty to cover as always, like we told you. Cement stocks have been in sharp focus. Ultratech, Cement, Shree Cement, all of them buzzing. So what's gotten the street so excited? Nigel will tell us more about that. Auto stocks are reacting to those November sales numbers. Most of them actually look pretty okay. We'll have Sudarshan join in just a bit to give us a roundup. And then, of course, we will dive into some of the key events to watch out for tomorrow as well. But first up, let's kick it off with Hormaz, who will present the movers and shakers of the day. Not a bad outcome for the bulls Hormaz today.
Absolutely not, and perfect start to the week for the bulls considering the data that we received on Friday evening. The good day for the benchmarks, good day for the broader market, so no reason to complain whatsoever. And it was the real estate index that was shining in today's session as well. Now in 8 out of the last 10 sessions has the index been an outperformer in the market, and almost all of these major names, be it Godrej Properties, Prestige, Macrotech, DLF, seeing gains of anywhere between 3 to 5%. Midcap IT had a very strong day. Now you may attribute that to a rupee depreciation factor as well, but some strong moves seen there. 6% each for Happiest Minds, Intellect Design, Axis Cades after the announcement that they made this morning, and Ramco Systems a 20% surge in today's trading session. Nigel will speak more about the cement stocks. It is undoubtedly the sector of the day today, and Ultratech, the top gainer on the Nifty, 4% higher there, and all the other stocks seeing healthy gains as well. A lot of stocks impacted because of the news flow. RBL Bank saw a very impressive recovery from the opening lows, but Ola Electric opened lower, market share loss, but the stock ending 6.5% higher in today's session. Dixon after a positive brokerage note, Biocon after the drug approval, and some positive brokerage commentary coming in for Anand as well. And lastly, some of the underperformers in today's session, stocks that didn't do well in an otherwise healthy market. Aegis Logistics ended at the low point of the day, 9% lower. A very sharp fall seen in Imami as well, 6.5% lower there. Some selling seen in Adani Group stocks, and CE Infosystems after the corporate announcement that came in, also seeing bits of cuts in today's trading session. Back to you guys.
Thanks a lot for that, Hormuz. Well, let's welcome our guest on the show, Anand, Tandon, as well as Jay Thakkar. Hi, gentlemen. Thanks a lot for joining in. Jay, what do you make of today's close on the index, and do you believe we've got more in store? From the recent low, we're up close to around the 1,000 points, by the way.
Hi, Nigel. Well, I think that yes, there's still some more bounce, left on the index, because see, what interesting data we saw today is that the stocks like Reliance, wherein we have seen the highest OI as far as shorts is concerned, Nigel, since 2006 is what the data I've seen, that Reliance has the highest OI on the short side, and there is where we have finally seen a bounce back coming in. So this will help to bounce back going forward. The index towards the levels of 24,500. Interestingly, we have this RBI policy this week from Wednesday it will start, and Friday we have it. And HDFC Bank, it has managed to come back above 1800 levels as well. And if it moves beyond 1820, I think that would clearly be an indication that Bank Nifty will also finally provide a breakout above 52,500. So these are the two heavyweights wherein I think one should be watchful. Reliance and HDFC Bank, which can take the markets up. Otherwise, the trending sectors have been IT, cement, which are likely to perform well, pharma as well. So those are likely to perform. Realty index doesn't have much of the weightage as far as Nifty is concerned, but then we have seen a breakout there as well. But more or less, oil and gas sector is one sector which is quite oversold, and I think we can expect good short covering out there from the OMC stocks like BPCL as well. So these are the index heavyweights which are likely to help Nifty move or inch towards 24,500 from the derivatives point of view. And technically, one more thing, Nigel, index has also formed a good short-term reversal pattern, which is called an inverse head and shoulders pattern, and the target for the same comes to around 24,500 to 24,650.
Okay, all right. Thanks for that, Jay. So I think you said that HDFC Bank as well as Reliance Industries, they're showing signs that they could move up, and maybe from the oil and gas space, some of those stocks are bracing for a bit of a bounce. Let's talk about the cement space then. That was the sector of the day today. Three big factors played out today from Jeffrey's report, and let's run you through them individually: pricing, demand, and raw material cost. On pricing, they're saying that prices were flattish for the month of November, which isn't such a bad outcome. And pricing for the third quarter, if we compare it to the second quarter, well, it's up by close to around 1.5% to around 2%. Though they make this point that they need price hikes to come about. Otherwise, they'll have to revise their estimates downwards. For the time being, their cement pricing estimates is higher than what the street has. The positive, though, is that dealers, they estimate that as of now, price declines have bottomed out. That's great news. And also in December, not ruling out a 10 to 15 rupee per bag hike. On demand, they're penciling in an 8 to 10% volume increase after a flattish first half of the year. And the recovery in quarter four in particular will be led by government spending. The October as well as November run rate, though, it's not quite matched up to those expectations, but they remain hopeful. Cost trend, petcoke prices have cooled off. It's still below $100 per ton. And it's on a quarter-to-quarter basis as well as year-on-year basis from quarter three. It's much lower. Valuation picture comes up for you on the screen. The large cap names first up. And some of those mid cap to small cap names, well, they in fact are trading at sub-replacement cost. The next plate will tell you the picture out there. And finally, though Jeffries is quite bullish on the sector, Mr. Anil Singhvi of Sri Digvijay Cement, he joined and he said, don't get so excited. He's saying that cement demand is yet to pick up. So that's why he's working with 3 to 4% cement demand growth for this year. And he's not seeing any big signs of big price increases. So he says he's optimistic, but he's still a little bit cautious. Anand, what do you make of this pack? Today it was clearly on fire, though the street is divided out there. Some believe the worst is still not in the price and they're still likely to see some kind of headwinds going ahead. Your take?
Are you talking about cement or the market overall?
Cement.
Cement.
Well, there is no case for cement at all. The capacity additions have been way ahead of where the demand is. We have the industry overall continues to operate at around 70%, where they just recover enough to be able to survive. And the rest of it about in terms of price increase, etc., is just hope. I mean, you can increase the price at a time when nobody is looking for demand because it's not going to sell anyway. The volume growths are pathetic, and as I said, there is complete surplus in the market. So overall, there is no case to be made for cement. You look at the strategic deals that are happening. Every cement company today is trading at or close, especially the larger ones, of $200 per ton. And you are looking at deals that are being done at $70, $80. That itself tells you that people are willing to cash out at 1/3 the price that the market is willing to pay.
Okay, so you're not quite convinced. And one understands that because this whole concept of a second half recovery, well, now we're down to practically in just 3.5 months of the year. So let's see if those price hikes and if that volume growth can indeed kick in. That's cement in focus today. Let's move on. Dixon Technologies was the other stock that was the talk of town. It was up almost 6% after the company's subsidiary planned to commence mass production of the Google Pixel smartphones at its Noida plant. We have Upasna joining in with all of the details. Upasna, so Dixon taking off in a big way today. Tell us the details.
Totally big way, Surbhi. So the stock remained in focus as company launches mass production of Google Pixel smartphones. Mind you, company's wholly owned subsidiary, that is Sagar Electronics, had entered into a contract manufacturing agreement with Compal for manufacturing of mobile phones. And the company has recently given us a update that it has commenced its production at its Noida unit. Now, on the back of this development, Nomura has given a buy rating with a target price of 18,654 per share. It says that the China Plus One strategy can lead to a significant long-term potential for Dixon from Google, and it estimates that the company can potentially add 1,500 crores of revenue, which is about 4% of FY26 smartphone sales. It also says that this development will certainly showcase Dixon's capabilities to make premium phones and will be a key long-term positive, is what Nomura has highlighted. Now, looking at the valuations, Dixon is currently trading at 90 times one-year forward PE, which is relatively expensive as compared to its other players in the EMS space. So all in all, that's the reason why Dixon remained in focus today.
Okay, all right, got that. So Dixon doing really well, and also as Nomura points out, there could be another scheme altogether for electronics manufacturers, which could be even bigger and better than the original form of the PLI scheme. And I guess that also got the stocks fairly excited today. Back to our experts. How do you find the EMS space, Anand? Whether it's stocks like Syrma, Keynes, Dixon, do you like any of them?
Well, I don't like the valuations, but otherwise, at least this is a business where there is growth. And I think the growth will likely persist for a while. The challenge will be whether they are being able to add more value over a period of time, because that is going to be key in terms of how what happens post the government subsidy that is coming through. But for the next few years, at least that's not a concern. And therefore, given the fact that we started from a zero base, it has to be called a major success. Like I said, I don't particularly fancy the valuations, given the kind of cost of capital that is there and the implied subsidy. But aside from there, at least, it's a growth industry and will likely have a fairly long runway.
Okay, all right. Anand, you're sounding a little bit cautious of the markets on the whole. Autos, do they meet the criteria that you're looking at? Anything you like out there?
Well, see, autos, you have already got an issue about having a change in the platform, right? I mean, you're moving to EV. There are new players coming in. So by and large, the competitive space is becoming more intense. And if you look back, let's say even 5 years or longer, you will find that most of the companies are actually in a much more competitive space with far more intense, likely slowdown in their existing portfolios and the need to invest further, are actually trading at 2 or 3 times what they were trading earlier. So that is one space that I would be even more cautious at. There are segments, of course, within the auto which are doing well. The UV space is doing well. Tractors will likely continue to do some reasonable amount. The two-wheelers, I'm a little less sanguine about, except if the exports sustain. If they do, then that's certainly an area. But I think in the domestic market, it will continue to struggle.
Okay, fair enough. Let's, in fact, dive a little deeper into the trends that we've seen in November, because we've got Sudarshan now joining in on the auto sales wholesale numbers that have been reported. So tell us, how things are looking, and particularly, I think some of the analysis that you did on market share in EV. It seems the two-wheeler incumbents, they're snatching market share from Ola.
So first, starting with the auto sales, November auto sales were mixed, and even stock move has reflected that for two-wheelers, exports continue to do well. And if you can see in today's state, both the stocks, TVS Motor and Bajaj Auto were top gainers, which have the good contribution from the export segment. For passenger vehicle segment, both Maruti and M&M were in the green, as SUV segment continues to do well. In the CV space, Ashok Leyland was in the red, as commercial vehicle segment remains under pressure. Now talking specifically about the company Maruti Suzuki, sales were a minor beat to estimates. Total sales were up more than 10%. For TVS Motor, sales were better than estimates, and EV sales have increased here 57%, and exports have risen 25%. With this, total sales were up 10%. For Bajaj Auto, again, like TVS Motor, it was led by export segment, and total sales were up 5%. For M&M, auto segment again was led by SUVs, and total sales were up 12%. SUV sales here have increased 16%. In the tractor segment, sales for the month of November were below estimate, but company says outlook is healthy, and it says good Rabi crop expected to boost the demand further in coming months. For Ashok Leyland, total sales were up 1%, and commercial vehicle sales here were down 11%. Now coming to Ola Electric. For the month of November, as per Vahan data, Ola Electric's market share was 25%, which is down 500 basis points if you compare from the month of October. Now the question is, which two companies have gained? Two companies here I am mentioning because both Bajaj Auto and TVS Motor, in comparison to Ola Electric, continue to hold their healthy market share. Now, in the month of November, Bajaj Auto's market share has increased 200 basis points, and now it's at 22%. And for TVS Motor, market share from October has increased 100 basis points, and now it stands at 23%. Just one more thing. Now, if you compare, if you look at the market share since the beginning of this fiscal, in the month of April, Ola's market share was at 52%. From that level, the market share has halved. Now, in comparison, for both Bajaj Auto and TVS, market share in the month of April were at 12% each, and now it's standing at 23% and 22% respectively. And Ola has been losing market share at the time when company has made announcement with respect to several launches. And auto sales, it was a mixed picture, but market share loss for Ola continues.
Absolutely, and I think that's the most interesting point, right? Whether these new launches at this really aggressive price points that Ola announced just last week, whether they will turn the tide, because otherwise it's not been a great year for Ola. The incumbents have really closed in. Thank you for that, Sudarshan. We'll also thank our guests on that note, Jay as well as Anand, for joining in. We have to take a very, very quick break. Come back on the other side. We'll have some of the top corporate voices for you that we interacted with today, and then the events to watch. Welcome back. So let's run you through some of the corporate commentary that we picked up during the course of the day. Aster DM in focus after it announced the merger with the Quality Care Hospitals. The management has told us that the combined entity will see revenue growth of 18 to 20% and about 10 to 15% EBITDA expansion over the next 2 years. The promoters of Aster DM will remain invested in this combined entity, and the company will also consider adding bed capacity via acquisitions. And in order to fund all of this growth, they have 1,500 crore rupees of cash from Aster's books, and they're looking to go up on the debt equity scale to up to 2 times for future expansion.
Pennon LLC India's management says they expect to launch its renewable energy IPO in the second half of FY26. The company also plans to increase its renewable energy capacity from 1.4 gigawatt to 10 gigawatt by 2030. Additionally, they are on track to meet the regulated equity targets till 2030.
Sheela Foam's management says the company is not seeing any demand slowdown. In fact, it believes that it is on track to achieving 1,000 crores in revenue from Kurlon by the fourth quarter. That is, of course, the acquisition that they did earlier in the year. They're expecting 10% growth this financial year, but the second half will be even better with 15% growth forecast for the second half.
All right, before we wrap up, let's get you all the key market events you need to track. Upasana is here to fill us in with that list. Upasana?
Well, first up, let me start with the economic cues that we'll be watching out for tomorrow. Firstly, let's start with US first. US will be reporting its job opening and labor turnover survey data for the month of October tomorrow, and will be also reporting its API weekly crude oil inventory stock data. Now, coming to corporate action, several stocks will be in focus tomorrow on back of this. Swiggy will be reporting its Q2 FY25 numbers. Remember, this is the first result post-listing. And Wipro, a bonus issue in the ratio of 1:1 will also take place tomorrow. Indo-US Biotech will also be in focus as this stock goes ex-dividend tomorrow. And lastly, Indian Bank will also be in focus as company increases its lending rates by 50 basis points across various tenures with effect from December 3rd. And lastly, let us look at what are the other events lined up for tomorrow. IPO Suraksha Diagnostic subscription closes tomorrow, hence even that we'll be closely watching out for.
Okay, all right, Upasana, thank you very much for that. Well, with that, we're at the end of the show, but we leave you with an outlook on perhaps the most important question, the burning question on the street right now. Will the RBI tweak either the policy stance or offer a rate cut or maybe a CRR cut come Friday, given this GDP print? Hear out what the CNBC TV18 Citizens Monetary Policy feels.
Cut in February, so a hold in December.
Hold, okay. Nothing, no action. Samiran? Soumya?
We are hold.
Okay, hold.
Very similar to Sajid, the hold now and cut in
Okay,
February.
none of you want a cut. Sonal?
25 basis point repo rate cut.
Okay, there you are. We have the first cut. And Dr. Sen?
Hold.
Hold. Okay, so this is 4:1 in favor of holding. Let me take the CRR question. Your thoughts, your vote.
Some liquidity management for sure, not necessarily CRR, but some liquidity management.
I'm taking a no for CRR.
But some liquidity.
Okay.
Yeah.
Soumya?
I would paraphrase it saying that CRR should be used as a counter-cyclical tool.
No or yes?
Some, not headline CRR, but yes on some specific products.
Okay. Yes, I'm going with a yes for Soumya. Shamiran?
I think it is likely, it's possible to do.
Okay, I'll take it as likely then, which is more a yes than a no. Sonal?
Yes, CRR cut.
Okay. Dr. Sen?
No.
No. Okay,
Categorical.
so categorical no. Okay, then I'll take it as 2 no's and 3 yeses. So probably more of a chance of a CRR cut. And very quickly now, last vote. When do you see the first rate cut?
February.
Soumya?
February of a larger magnitude possible.
Okay, February 50 bips. Okay, Samiran?
February.
But I think we already have Sonal's vote, right? Sonal is December. So I'm not asking you, Sonal. You can flash December. Dr. Sen?
February.
February. Okay, so just about everyone is expecting a February cut, except Sonal, who thinks that it should be advanced.